Good afternoon. It's Tuesday, September 26th. I was going to do a hot stocks video wrap up for you. Given the volatility of the market, normally I'd like to just make these for the Mission Winners premium site, but I wanted to just share a few things with all of you for both Twitter sites, just to kind of get us up to speed and hopefully educate you. My goal is this. I don't want to just give stock tips. I want to educate you. You know, there's a great quote. Give a man a fish, feed him for a day. Teach a man to fish, and you feed him for a lifetime. I want to teach you to fish. So we're going to take it from the top here. The Dow. The Dow closed down on heavy volume yesterday. It gapped up today. It went up and took out the highs from the previous day, and then reversed and closed down at its near the lows for the day. It's not the best action. Spiders gaps up, reverses, closes down, bottom third of its range for the day on low volume. Just a little choppy. It's not the end of the world though, please. Not the end of the world. It's just something we have to be aware of. A lot of people like to gloss over this. I just think it's really important that we look at the charts, the price, the volume, the open, the high, the low, the close, every day. You get this down to a routine, seriously, you can go through 100 charts and I'm not exaggerating, you can go through 100 charts in like 10 minutes. It's no big deal. So we're going to keep working on it for us. The comp. Look at this. Here's a contrast for you. The S&P 500 is above the 20-day. The comp is below the 20-day, and it's on the 50-day. Look at this. Closes, gaps down the next day. That right there is the open. Closes in the bottom half of its range. Today it gaps up, runs up, closes in the bottom half of its range. It's weak right here. It's right on the 50-day. Needs to lift through here. Is it going to? We don't forecast. I don't know. Boeing. We're still in Boeing. We picked it up here. You can say, how come you're still in it? It's walking up the 8-day. Until that changes and it loses the 8-day, you can't sell all your shares. Did we sell some into strength? Yeah, but you've got to have rules. Just makes it simpler for us. What you'll find out is the less decisions you have to make and the more systematized you become, the less stress you have. You just know how to do things. You just do it. Here's QLD. Closes here, gaps down, gaps here at the open, closes in the near the lows of its day, the bottom half of its range on a pickup in volume. What does it do today? It gaps up, rallies up near the 50-day, and closes right at its midpoint on average daily volume. It's below the 50-day, needs to straighten up. SSO, we went through the spiders. You know what this is doing here. It's chopping around. TNA is actually leading the charge. It was below the 200-day for a long time. That's an old note. Look at how this is trending up the 8-day. Something really important for us, folks. We have to find trends. We look for trends and we let it work till it stops. Apple, falling on heavy volume. See these red bars? Red is not good. Red dropping down, unless it's Sammy Hagar, okay? But that's a different story. Red dropping down. Gaps up, little today, closes, volume, much less than when it went up on. Takes volume to lift the ship. Nothing there. Amazon, lost the 50-day, fallen, noisy here. We buy strength, we don't buy weakness, nothing to do with it. Alibaba fell and lost the 20-day on a pickup in volume. Nothing to do with it. Still above the 50-day. Maybe it'll lend itself a buy sometime, but right now, no. Baidu's chopping around. Lost the 8-day yesterday. Sold the rest of the shares. Gaps up today. Rallies. Closes right near its bottom third of its range on average daily volume. Just choppy. Nothing really to do with it. Google flopping around. You know, you always have to sit there and say to yourself, hey, would this chart be in a chart book for saying, man, this is what we're looking for to buy? Well, I got to tell you, right here, that chart won't be in a chart book for a clean and simple buy setup. Goldman Sachs, hovering in here, right above, that's the 200-day. This is the 50-day. Just basing here. But notice this. This is refusing to fall. It's hovering in here. That's a limit alert. We'll watch it and see. Netflix lost the 8-day, sold the rest. Right there. We're out of it. Makes it simple. Bought it here, trend it up, take it out, goodbye. Nvidia, We went through this one yesterday, lost the 8-day, and it's flopping around. Look at this though, folks. This is really interesting. I'm going to make this bigger for you. Look at that. Right here, it gaps up, runs up, takes out the previous day's highs. It's like, boy, we can do the happy dance now. This is great. And then it fades and closes in the bottom fourth of its range for the day on a pickup in volume. Folks, they weren't buying it. They sold into that. That's not good. Now, am I telling you that's the end of the world for Nvidia and it's over? No, I'm just saying it's not. We can't do anything with it right now. Tesla, we sold it losing the 8-day. It's flopping around below the 50-day. Nothing to do with it. This is one that I talked about in the missionwinners.com site. I sent a list out to the VIP group members last night, and this was on the list. And you can say, why? I'll show you why. Because this. I talked about it in the video last night. Stock's refusing to fall. But something we have to do, and this is really important, we have to temper our stock purchases and stock sells with what's the market doing. The M in CanSlim are the M in mission winners. The market. If the market's sloppy, choppy, it's like a headwind. It's pushing against us. It's hard to make progress. So I pointed this out to the group this morning, and I told them, and this is a great investing trick. It's on the 8-day. Let's see what it does. Well, here's what it does today. It gaps up. You see that little open right there? It gaps up. It's like, oh boy, this is it. It's going to take off. One of the tricks that's really good to do in a choppy market is when a stock gaps up and it looks like it's buyable, look at a 30-minute chart. I'm going to get rid of that note right there. Here's the 30-minute chart. Here's the gap up on the 30-minute chart. It runs up and everybody's going, that's it. We're as pleased as punch. Let's buy the stock. And then it starts to fade and closes almost in the bottom third of its range on pretty heavy volume. They sold into it, folks. That's the 30-minute chart. Here's the hourly chart. Look at this. Gaps up, runs up, closes near its lows. There's a great investing trick that I learned from some wizards in this business, and it's this. When a stock gaps up and the market's kind of in a rough zone, which it is, wait 30 minutes to an hour. Wait for it to take out the highs of the 30-minute bar or the high of the hourly bar. If you had waited, you avoided this. That's pain. That would hurt. There's the daily chart. If you say, oh, this is it, I'm buying it at 74 to 75 bucks a share. Here it is down here at 69 and a half. That's frustrating. On a pickup in volume. It's a great investing tactic, and I want to share it with you. Crummy markets, when stocks gap up like this, watch them for the first 30 minutes and see if it provides a clean entry for you. And a clean entry should give you a clean exit. Restoration Hardware. I want to show you this one. This one was written up in IBD this weekend, and it's going sideways. It's a little loose here, okay, so be careful, but just kind of going sideways. There's my limit alert. Now, here's your first response. You can say, oh, Pat, thanks. That's a great one. Well, what did I just tell you? You've got to factor into the equation what the market's doing. The market's choppy. You got to be careful with these. If this gaps up tomorrow morning and the market's not going, I'm not buying it. I got to wait. What's the plus with this, though? I want you to look really close and tell me, what's the good thing about this? First, the bad thing is it's kind of choppy. Secondly, the market's not good right now. Right here, that day right there. Big volume pickup, closed in the top half of its range. That's good. Flops around. Today, opens up just a little bit, closes near its highs for the day on a volume pickup. That's constructive. Something to watch out for. And again, it was written up in Investors Daily, and it was a positive write-up. SQ. We sold this yesterday. Losing the 8-day. Took it out. Heavy volume. Today it gaps up, it runs up, and look at this. They sold it. Closed in the bottom fourth of its range today. There's nothing good to do with it. We got to leave it alone. By the way, I asked this to the group. Both sites, both Twitter sites. Is this a good bar or a bad bar? Why? It's a bad bar. You can say, whoa, no, it's not. It closed up on the day. You always have to put into context where it opens, daily range and where it closes in relation to the previous day. It closed here on heavy volume. It gapped up and it went up and then it fell. It closed above this bar's high, or a close. I agree, but it closed in the bottom fourth of its range. They weren't buying it, they sold into it. We have to let the dust settle and wait. And somebody could say, oh, well, let's buy it today. Now we're imposing our will on the stock. Let the stock price action tell you what to do. Just makes life easier. I'm going to do another one here real quick for you. NTNX. I asked the groups, and you probably saw it on the Twitter sites. It was in both the large Twitter room and in missionwinners.com. I ask questions and I point out a lot of different things. Right here, good bar, bad bar. Close opens just a hair below the close of the previous day, falls, and closes in the top half of its range for the day. It was actually a decent day, not a bad day. Fell down hard, closed in the top half of its range. They supported it. Now, I got a question for you. Good bar, bad bar. This bar right here. Good bar, bad bar. And you should sit there and look at that and say, well, Pat, let's see, it closed here. It opened right there. There's the open. That little hash mark is where it opened. It went up, and then it dropped down, and it closed basically right near its lows for the day on a pickup in volume. And it's not a good day. That's not what we're looking for. Federal Express, this is in a leading group, just going sideways. What catches your eye there? Up on heavy volume, down on less volume than it went up on. Quiet day, open down and closes up a little bit above the rising 8-day, slight pickup in volume. It's in a leading group. Just wanted to share that with you. And then finally, FAS, going sideways. That's related to Goldman Sachs. Now, I say this a lot. The biggest part of this game isn't what's before our eyes, it's what's between our ears. And so I just want to share this with you. And I'm not going to take a lot of your time because that's not right. By the way, I enjoy doing these. I hope these help you. I'm going to be co-leading an Investors Business Daily Meetup. And I got to tell you this right now, a lot of the stuff I'm talking about will be talked about tomorrow. There's a great book. There's a couple of great books that I've suggested on the Twitter feeds for a while in the missionwinners.com room. And I encourage you, if you want to get my nightly list and my actual heads up on what I'm buying or selling, that's in missionwinners.com, VIP. This is a good book. It's Market Wizards and the New Market Wizards. And I just want to read a couple things to you, okay? Interviews. Charles Faulkner, interview with really successful traders. I'm not going to take a lot of your time, but this is a big part of the game. One thing that really struck me is not that not one of these people said they truly regretted anything they had actually done. What they regretted was what they hadn't done. Think about what you want to do. Don't let anybody say no. And reach for it. Strive for it. How do you know whether the goals you're pursuing are the ones that will fulfill your values? That's an important question. It's useful to think in terms of mission. Well, there's a word for you. Mission. Wonder where that came from. Mission. A mission isn't something you force on yourself or construct out of your current concerns. Rather, it's something that you discover within. Something you discover within. Mission. Mission winners. Keep on going here for you. One of the things they point out is, what are some of the primary motivators of successful traders or investors? And here's the question for you. Do successful traders or investors tend to have one type of motivation over another? And he points out, it's nearly impossible to be a really successful trader without the motivation to get away from excessive risk. It's nearly impossible to be a really successful trader without the motivation to get away from excessive risk. So these are the things we want to look for. In the other Market Wizards books, it talks about two different types of mindsets. One is this: see the signal, feel bad about the signal, say to yourself, I might lose money, and don't do it. The other individual looks at it, see the signal, feel good about this signal, go ahead and do it. What we're trying to do is educate you to look for clean and simple patterns that work through time. Does everything work? Do these things work all the time? No, and that's why we limit losses. We have to limit losses. I just wanted to share this with you. It's more than just about the charts and chart education. We also have to try to figure out what's going on in our head. I hope this helps. I hope you have a great night. Again, if you have an opportunity, go to missionwinners.com. Those VIP members are going to get a list of my stocks that I'm looking to buy tomorrow. But I'm also going to tell you this. When the market's choppy like this, I pull in the horns. Gotta wait. So that's all for tonight. I hope you all have a great night, and I thank you very much.